Shares of Apple are in an absolutely enormous bubble. Apple's current market cap is now well above $2 trillion at $2.152 trillion. In less than a year, Apple's market cap went from $1 trillion to over $2 trillion. That chart's a little bit old, but you can get the picture that Apple's chart is going parabolic. So why is Apple stock going parabolic? So these are Apple's valuations from Yahoo Finance. And as you can see in the last little over a year, the valuations on a lot of different valuation metrics have drastically changed, whether that's the PEG ratio, price to earnings growth, the forward PE ratio, the price to sales ratio, the price to book ratio, which is up enormously. So the valuation metrics have changed enormously, but Apple is not really that much of a growth company anymore. And I'll talk about that in the next slide. So this is some research that came out recently out of China, out of Quest Mobile. And it shows that Apple's market share is declining pretty rapidly in China. And Apple is losing a lot of market share to Huawei. And why? Because Huawei's 5G phone is cheaper and better. Now, this video is not going to be a discussion about intellectual property theft and how Huawei has basically taken the research and development and intellectual property from companies like Apple, LG, Samsung, Sony, Nokia, all the other major cell phone brands over the years, and combined them into a new 5G smartphone device, as well as done their own innovations recently, and is offering a better and cheaper product, and how people in mainland China are loyal. This is about, is Apple still a growth company, and is a high valuation justifiable because Apple is gaining market share in growth areas like China? And clearly you can see here with declining sales that it is not the case. And this study came out on August 5th. There are other similar stories that really Apple sales are trending down for the last couple years in mainland China. Huawei is taking more and more market share away from Apple. Also, in the same study from Quest Mobile, it shows that a lot of Apple iPhone users, smartphone users in mainland China are not upgrading to new iPhones, whereas Huawei smartphone users in mainland China are. So over 50% of Huawei smartphone users are upgrading to the newest Huawei smartphone, or at least a newer smartphone made by Huawei, whereas Apple users in mainland China of iPhones are not. Finally, what's driving the Apple stock price higher then? And I think, and I put it in all caps with exclamation marks, momentum. So Mike Green's work, and he's talked about this extensively on the Hidden Forces podcast with Dimitri Kofinas in the last year or two. There's a lot of long interviews talking about it. He's also talked about this on Real Vision TV. He also talked about this recently on Grant Williams's new podcast. And I think George Gammon just interviewed him as well. Or if he didn't interview him, he's about to interview him. But George Gammon also did a passive investing video too. So Mike Green's work on the FANG stocks plus Microsoft and the passive index fund investing bubble, and how it is shockingly purely momentum driven, because it's counterintuitive, because you would not think that index fund investing is momentum driven, and also net capital inflows coming into major US stock market indexes and the FANG stocks and Microsoft from out of the United States. So emerging markets and other money managers outside the United States are still coming into the United States on a relative basis for safety. Also, that means that's going to, if more capital inflows are coming into the US, that's going to give the dollar relative strength as well, at least temporarily. Next is pricing power in the Apple ecosystem. Bullish Apple analysts and Apple stock bulls expect Apple to be able to keep hiking prices in the US basically substantially every year. Pretty much all the bullish Apple analysts that I pay attention to, that I've seen talk on TV or read their articles, they expect price hikes to continue without many customers leaving Apple smartphones, tablets, laptops, desktops, etc., because the pictures, the music files, the videos, all these things are stored on the Apple cloud. And then finally, the market is totally ignoring any long-term risks for Apple, like the financial engineering that is occurring with the balance sheet. Why is the Federal Reserve buying back Apple's bonds? And Apple is doing share buybacks and issuing debt. So they're not doing the conventional technology company things of the past, like growing revenues, spending a lot of money on research and development, and actually innovating. And there's been a lack of more than incremental innovation, a few new features here and there with an iPhone or an iPad, and then they charge a higher price, and a lack of new products and services. Apple is not taking, as a company, enormous risks. Okay, they are doing incremental innovation, which Peter Thiel has talked about in his book From Zero to One. It's a good book. And he's heavily criticizing in that book Silicon Valley and the lack of innovations that Silicon Valley has done for decades, because a lot of people are taking so little risk there. And there's a lot of financial engineering and a lot of games. And there's a lot of investor capital that was wasted for really tiny amounts. He called it incremental innovation. Collapsing sales of iPhones in China compared to Huawei, and how many of Apple's US customers, and this is shocking. I actually spoke to a local Sprint store managers and employees a number of years ago. I think it was 2016. And I live in one of the 5 highest average median family income counties in the whole country. And they were telling me at the Sprint store that the majority of customers that buy either new iPhones, brand new iPhones, or newer iPhones, they're upgrading maybe to a slightly used or not totally brand new, but maybe it's newer for them iPhone, and they still can't pay the full price. So they can't pay the full price with a credit card, and they can't pay the full price with cash. And they're just asking, and this is the scary part. It's very similar to subprime borrowing for car payments, for subprime auto payments. And going to stores like Aaron's and others, like layaway plan places, they're just asking to pay a higher monthly payment. So instead of paying full price upfront for a brand new or at least newer iPhone, many American Apple customers couldn't even afford to put an iPhone on a credit card before the pandemic. And they're also trying to just pay a higher monthly payment. So instead of like 40 or 50 bucks a month, they're willing to pay 60, 70, 80 bucks a month for a brand new or at least newer iPhone or smartphone, so they can tell their friends and make their friends think that they're doing a lot better financially than they really are, showing them that they have a new smartphone. That's the scary state of the American consumer, the lack of savings, and how sad it is that people can't even afford to pay upfront cash for a brand new smartphone. That's how bad things were before the pandemic. Now imagine things in the pandemic. We'll have to see. But in general, I think Apple sales, their new sales growth is going to be trending down. I think their earnings growth and their revenue growth is going to be mostly, in my opinion, from price hikes. So they're going to keep their existing customers, the people that are loyal to Apple, that cannot switch away, because the Apple ecosystem has their photos, has their music, has their videos, their other things stored in the cloud, and the cost of switching is too difficult or too expensive. Apple's going to take advantage of that. That's called pricing power. And they're going to keep raising the prices pretty much every year on those customers. And that's their business model for now, because they're not doing that type of innovation with new products and services. They're not taking big risks like Apple used to in the past under Steve Jobs. And that is what Peter Thiel is criticizing now for a long time. In his newest book, 0 to 1, it's talked about at length, but he's also talked about it elsewhere as well. And in general, it's a big problem with Silicon Valley. There's not a bunch of enormous new products and services. A lot of the stuff is incremental, like dating apps and a lot of other ridiculous things.